Hello traders, Gary Wagner here, just about 10:45 in Honolulu, 3:45 in New York, meaning there is about 15 minutes left in trading in the U.S. equities markets, which are under tremendous pressure, trading off in the Dow Jones Industrial Average in terms of the net loss, triple digits again today, but we're down about 325 points currently at 16,193.70. Now, the low is 16,123, so we're about 50 points off the low, and the high is 16,000, call it 600, 16,593, so about 400 points off the high. We have had a tremendous range on the day, and it does appear as though we will close strongly to the downside today. Now, in terms of some of the other markets, we'll look at the S&P in a second. Crude oil is trading up, but up ever so slightly, after hitting a low just at around $30 per barrel. That's the low on the day. The high, $31.71. Whether or not we have oil find some sort of support in this area really is a $64,000 question, especially for equities, because the one thing that we have to realize is that the oil price has been a tremendous factor in terms of bringing this market down. Now, we talked about the fact that just prior to this, we had some real lows and some potential support that came in right here. Call it 33. It's 32.98. But once we drifted below there, and we're at 30.48, as you can see, once we drifted below here, we really had to go to a price point or a time cycle, which took us back to about 2004, because it hasn't been since that time since we have seen oil prices roughly drifting at the $30 per barrel price range. So we extend this, you can see end of 2003, beginning of 2004 right in here. And that's really the last time we saw the price of oil this low. Now realize that the price of oil has gone as high as 150 a barrel before dropping. And in this last case, just above 110, call it $115 per barrel before dropping lower. And you can see the series of tops that we had, as opposed to the single top that we had when we had that meltdown in 2008. So quite a different scenario in terms of how we're looking at the price point as it changes through time. A dollar right now, it is a little bit weaker, but very, very, I would almost call it unchanged, down 0.43 or 0.04%. We are still pegging resistance at 100. We are still pegging support right in this area. I believe that we are right on our support line. We've talked about this particular price point before, but when we look at this market, you have a 23% retracement, which comes in at 98.90. We are at 98.93. So we are just at support. Resistance, I am still pegging right at 100 on the dollar index. On the euro dollar, I'm putting resistance roughly at 109, 108.90. And we are trading in terms of the euro, although up slightly, is still pegged below resistance on the day. The last thing that we need to look at is going to be our Standard & Poor's, and that's the market that we have been effectively following and looking for a particular price point in which we could find some sort of support in the market and actually look to take some sort of a stab. We certainly did not get that today. If you recall from yesterday, just as we were looking at a Three River Evening Star, which appeared in gold, we had a confirmation of that, but because it was so close to that 1080, that support level, I did not make a move. We had a nice variation off of a Three River Morning Star. In other words, we had our defined downtrend, so it met criteria number 1. We had a long red candle, criteria number 2. We had our star gap at the bottom. But we also commented on the fact that the green candle wasn't really as long as we would like, and the fact that it didn't close up near the highs to me was also significant. But my conditional trade alert that I put out yesterday, in essence, stated that if we had today's candle be basically the mirror opposite of what we saw yesterday. In other words, yesterday I would have liked to see a close something like this being a green long candle. And then, of course, today we would have had to follow it through, as I said, with a green candle, higher high, higher low, and the real parameter that we needed to take out to actually have that trade get triggered was an effective close above 1937. The reason I put it there was I believe this is an important fib retracement area. It's a 61% retracement from the bottom of this August meltdown up until the highs that it reached just after. Now, we have clearly broken below 1900. That's evident and quite evident, and we're closing well near the low of the day. You can see a very small tail as opposed to the size of the tail that we had when this market was trading higher right up in here. And the fact that we have now closed below that is significant because, as we talked about yesterday, to really put into play any kind of a strong bull model with a rally and then a subsequent correction and then a rally again, you really want to see this market in terms of where it finds support be roughly at 76%, because once it goes past that, as it has, it's very difficult for us to keep in play any kind of real bullish model here, which really puts us back to the blackboard. Now, what are we looking at this point? Well, my sense is that we have a couple of lows that we need to see if they hold. Of course, the low at 1831, that's the low we hit during the August meltdown, but we also have a low at 1860. Now realize this is all vis-a-vis the E-mini because the Standard & Poor's 500 trades higher than the E-mini does, but we also have support at 1860. We have support at 1820. Potential support, I should say, and we're closing right now at about 1882. So we're going to have to see where this market wants to track to and whether or not, if it continues to falter, will it find support in the area of 1860? Will it drift below? If so, we would look for support in this area. For right now, we are going to absolutely stay sidelined in the market, see how the market reacts. We could, in fact, find some sort of support and have it pop back up, but it's not really at a technical number. But then this market has been highly fundamentally based, and so it really depends on what we see transpire over the next few days. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.